Cloudcast Media.
Drew Schlosberg Spotlight on the Community Show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
I'm Drew Schlosberg with Cloudcast Media, and I got to tell you something. We have another rock star guest in our midst today. He's been frequently on our show, which we're very much honored to do, an expert in his area in finance, and that is Doug Wright, the Chief Financial Officer for Mission Fed Credit Union. How you doing, Doug?
I'm doing very well. Thank you, Drew.
It's a great day when we see you in the studio and joined by my great co-host, Aaron Tanner. We're hoping to turn this into a semi-permanent job for you, whatever you want to do. I know you've been doing a great job in this area, and I want to brag about Doug quite a bit. Not only does he do a great job with the Mission Fed, he's a true community leader. I've been very supportive on the executive team of the San Diego Council on Literacy, and we're very appreciative of that as well.
It's my pleasure. It's a really great cause, and I want to do everything I can to contribute.
And you already have done that. Of course, the mission of Mission Fed, as we talked about, this is a credit union that for many, many years, 60 years, just does great things in the community. What I've always been impressed with, you've heard me say it many times, Doug, is that you guys do it more than just with the checkbook. When you guys get behind something, it's the employees that get in and they're volunteering at events and they're doing things and they're supporting things and they're working on Saturdays and Sundays and so forth. You talk about that culture at Mission Fed.
Yeah, absolutely. Our core mission, pun intended, is really to uplift San Diego from a financial and overall wellness standpoint. So we do really go all in when we commit to something or commit to improving the community in one way, shape, or form or another, or through one means or another. We're going to go all in. So it's going to be with resources. It's going to be with people. It's going to be with in-kind media. It's going to be with whatever opportunities we can provide to really amplify and leverage the good things that are happening in the community. And that's just kind of our DNA and the essence of our culture. And Mission Fed is a perfect description of what we do when we're on a mission to serve.
Well, you do that, and then what's cool about it, the results fall behind. Whenever you work with some group, either they got more folks in attendance at the event, they raised more money for the event, they found more volunteers for the event. And I know in your world, metrics are very important, as can be, and I know Aaron's going to get right to it right at the top.
Yeah, this is a hot one. So with the recent bank collapses, educate us on how credit unions are different.
Oh, certainly. Yeah. We've all experienced, I think, our own form of March Madness in the credit union and banking industry. And I would tell you, I guess, that overall, people should not be concerned as concerned as, kind of the fair should breed or is breeding out there in general. Everyone is insured, whether you're at a bank or a credit union, up to a minimum of $250,000, backed by the full faith and credit of the U.S. government. So if you're at a credit union, we're backed by an organization called the NCUA, or the National Credit Union Association. And so your money is safe with the credit union up to that level. Depending on how you structure your accounts, it can go above that 250. It could be 500. It could be 750,000 or $1 million. So that's really important as a baseline in the credit union and banking industry in general to understand. When we talk about Mission Fed in particular, and you take a look at how Mission Fed is different and how a lot of credit unions are different from the three banks that have really run into trouble, it's a very different, particularly deposit profile. Our members are very different and have very different deposit habits than what you saw, particularly at Silicon Valley Bank. When you look at Silicon Valley Bank and you look at the people who are in the businesses who were depositing at Silicon Valley Bank, 93% of those deposits were not insured by the federal government. And it's because they had relatively larger businesses and a lot of small businesses too, but they were routinely exceeding that $250,000 limit. When you look at Mission Fed, our same ratio of uninsured deposits is about 7%. So 93% of our deposits are insured, 7% are not. So that's a very dramatic difference in terms of just the insurance level and how much insurance coverage that our depositors have. Another indicator of that is that, kind of the average deposit size of an account or a member at Silicon Valley Bank was about $3 million. Ours is $8,000. So we're really serving
a little difference.
Yeah, we're really serving kind of the consumers, the people who bank with us are the bread and butter and the salt of San Diego, basically.
Right. I want to get back to that 250,000. So that is it in the individual or is it in an individual's account? So what I mean is, so if I have $250,000 as Drew Schlosberg, the individual, which is protected, could I have another $250,000 protected if it's Drew Schlosberg and Associates, or since it's my name, nope, it's $250 total?
It really depends on how specifically that's structured in terms of your business versus your personal assets.
Right.
So, for example, if you have it at $250,000 for Drew Schlosberg and you have a joint account with someone else, then that's another $250 because they have the $250,000 limit as well. So it can get relatively complex relatively quickly.
Right.
But the important thing, kind of as a baseline, is it's really $250,000 per account owner.
Right.
So,
and I think one of the things I know before Aaron gets into something that you do a great job with, and I can't wait for you to articulate when she asks you the question about earn money safely and then budgeting and all that business. But what happens is panic. People just sort of overreact to stuff, and they don't take a step back and they don't say, go ahead and listen and say, oh my God, Silicon Valley Bank just absolutely imploded. That means my bank is, which is absolutely 100% not true in that aspect of it. So part of it is just trying to talk people off the ledge, is it not?
Mm-hmm. Yeah, absolutely. I think unfortunately fear precedes reality in a lot of situations. And so our goal is always to ensure that our members feel very safe in banking with us. And whether that's through, working with them on NCUA limit structuring, or whether that's just assuring them that we've been around for 61 years, we've been through at least 5 or 6 of these different waves of financial crises and been able to serve them effectively and well through all of those banking, whether it's the fact that we're a top-rated credit union by various independent organizations that rate the safety and soundness of the institution. We try to just really relay to members that their money is safer and better invested in doing something within the credit union than it is in their home safe or their mattress or anything like that.
That makes all the sense. And we're chatting with Doug Wright, Chief Financial Officer for Mission Fed Credit Union. I'm Drew Schlosberg of Cloudcast Media. As you're listening to another edition of Spotlight on the Community show with our good friends, Mission Fed Credit Union, and this beautiful Mission Fed studio here in Scripps Ranch. Mission Fed's been doing great things for San Diegans for more than 60 years, joined by my co-host, Aaron Tanner, who's got another question for you.
Yeah. When you say earning money safely, what does that look like to you?
So earning money safely is the ability to do, not only to have your money be safe and accessible to you through a local branch, through ATMs, through debit cards, or whatever means by which you access that, but also being able to earn a reasonable return on your money. And that's even better now than it was a year ago, because a year ago, if you remember, interest rates across the board were very, very low.
Correct.
What's happened with the last year is that the Fed has raised rates, substantially, and that's allowed Mission Fed to raise our rates on deposits. So our members and our prospective members can actually earn a reasonable return. We have a CD special, for example, a certificate of deposit special out that will allow people to earn 4.35% on their money at this point in time, which is a very nice return, particularly in comparison to what people may be earning right now in another account, or certainly were earning a year or two ago. So we would encourage everyone to take a look at what they're earning in their current, account and take a look at the options that are available now, because it's a very different environment.
Yeah, and then what goes with this is why I highly encourage people to really look up or link up with certainly Doug and his advisors at Mission Fed. One of the things I want to make sure we get a point of, you are willing to chat with not only you personally, but the folks you work with. Any of your members that have a question, they can call, and non-members. Is that correct?
Oh, absolutely. We are very much about serving the community at large. So obviously, we're going to take really good care of our members,
right.
But we also want to uplift San Diego in general. So people who are interested that are not necessarily members or members yet, we would really like to talk with and discuss, the concerns around the banking crisis or how they can earn more, or any issues or concerns or questions they have in terms of financial, kind of their financial well-being.
One of the things I also want to, chat about, everyone knows that people are earning a whopping 0.050 interest on their accounts. Now they're offering, like you're mentioning, 4.5% or whatever the case. Mm-hmm. And their parameters are minimum deposit of X, and it's got to be in, secure, or you can't pull it out for X amount of months and all that. That's why you need to talk to the folks. But what makes that important is, and maybe you can talk about this before we pivot back to Aaron, is the interest rates on credit card borrowing is going up. Okay, and going up pretty substantially, which means if you can afford to do this, please pay off your credit card bill when you do that. You maybe earn some points, that's great, but if you're now paying 25%, it doesn't do too well. Talk a little bit about that.
Yeah, certainly. You have two different types of credit cards. You have what's called a variable rate credit card, and you have actually a fixed rate credit card. So the variable rate credit card is typically tied to an index. That as that index goes up, and it's usually like the prime rate index, as that index goes up, which it has been, it's up about 5% over where it was last year, the interest rate of your credit card is going up by that same amount. So particularly if you're in a variable rate credit card, it's a really good time to be able to pay that down or find some other option that it's a lower rate that would allow you to pay that back more quickly than paying the additional 5% and particularly paying the minimum payment. It'll take you a long time at a much higher interest rate to get out, and a lot more interest expense to you.
Right. We come back from break. I know Aaron's going to chat with you a little bit about something you folks have built for 60 years, and that's trust. You sort of made a point about that. I can't wait to hear your response to Aaron's question on budgeting wisely and so forth, and adjusting your budget. Sounds so obvious, but a lot of people don't do that. And then, just maybe some tidbits in the second half of the interview of people stay calm. Okay, this is not the time to panic and all that business and so forth. When we return with Doug Wright, he is the Chief Financial Officer for Mission Fed Credit Union. I'm Drew Schlosberg, and you've been listening to another edition of Drew Schlosberg Spotlight on the Community, show on Cloudcast Media, brought to you by Mission Fed, doing wonderful things for San Diegans for 60 years, and joined by my wonderful co-host, Aaron Tanner. We will be right back.
When you do your banking with Mission Fed, you get great rates on auto and home loans. That's good for you, but something good also happens for a lot of other people. We're not for profit, so we put money back into the community to help lots of great nonprofits to keep San Diego strong. So you're not just getting something good, you're doing something good. Come to Mission Fed. It's banking that's good for all.
Brand amplification is the DNA of Cloudcast Media, and our code is the powerful blending of sound, voice, and storytelling to lift local brands and their communities. Whether it is our Brandcast, Schoolcast, or Causecast platforms, the unifying ethos is all about this community, the one you call home. If you dare to dream and want to explore the brand amplification of Cloudcast, a national leader in local podcasting and other Winfluence strategies, please visit us at cloudcast.us.
I'm Drew Schlosberg of Cloudcast Media, and we are back with Doug Wright, Chief Financial Officer for Mission Fed Credit Union, and another edition of Drew Schlosberg Spotlight on the Community Show, brought to you by Mission Fed here in these wonderful studio and Scripps Ranch. Mission Fed just been doing amazing things for 60 years with its members and just the people at large in San Diego County. Aaron?
Yeah, you have a reputation of maintaining trust with your members. Tell us more about that. How do you establish that?
Yeah, maintaining trust really starts with taking the time to talk and understand a member's needs and their financial situation as it stands right now. So we really try to take the time and ask the right questions to really understand what the member is concerned about, what their current situation is, what their goals and objectives are, how they want to manage their money on a go-forward basis. And by doing that, it allows us to recommend kind of the right solutions, whether it's a product or service we have, whether it's, pay more close attention to budgeting, whatever it may be the case. It allows that basis of understanding allows us to recommend solutions that will help uplift them in terms of financial wellness. And that's our goal. And we've been pretty successful, I think, or at least our members have told us we've been pretty successful throughout the 60 years in being able to accomplish that goal. And you do that on a day-to-day basis through all of the work we do in our branches, all the work that we do through our contact or call center, what we do on the website, and so on. So I really think it starts with that. In addition, I think you build trust by doing good in the community. And we have a real focus, as we talked earlier, about doing good in the community. So we're reaching out beyond just our membership base and offering the same kinds of financial services and financial counseling and wellness uplifting to a variety of different nonprofits, to the public at large through various events that we do, to having discussions like this on Cloudcast Media. There's a variety of ways in which we can also build trust through what we're doing in the community and how we're providing financial wellness tools and information to people. So I think it's a combination of focusing on individual members and what they need to do better, as well as what the community needs to do better as well.
And you touched on budgeting. Can you give us some advice around that?
Yeah, sure. Budgeting is something that is not fun for most people. But if you get in the habit and practice of budgeting, it really is an uplifting and rewarding and building independence type of activity, because you really understand where your money's going. And you can once you have an understanding of where your money's going, you can make conscious decisions about where your money should go on a go-forward basis. And a budget allows you to do that. And it allows you to set your own priorities. Obviously, food, shelter, gas, those types of things are priorities that are set for us because we need that. But it allows you to set priorities in terms of the other spending you do. Without a budget, what happens is it happens randomly. It happens by happenstance. And all of a sudden, you're at the end of the week or the end of the 2 weeks or the end of the month, and you don't have the money to spend on something that may have been a priority to you. And so budgeting allows you to do that more effectively. It also allows you to forestall potential problems in the future. So it allows you to identify if you've got certain habits that are going to create problems in terms of overall credit card debt or lack of savings or whatever the case may be in the future, and make adjustments early on so you can do better to create effective solutions and prevent problems in the future.
Now, will you work with individual members with their budgets? So they come in and they've got X amount saved, and you and I have had this conversation before, Doug, that we're pretty pitiful in this country, probably around the world for that matter, but in saving money, right? And one bad thing happens to your car, or your refrigerator, or hail comes through your roof, and I don't have $10,000 socked away. I'm I'm lucky if I have 500, for God's sake. And now you're putting it on the credit card, and now you're doing 25% interest and everything bad that comes with it. You're so spot on about the budget. But will you work with someone to say, okay, you bring in X, okay, what is your expenses, right? And they're going to have to make some pretty tough choices on certain things. But when you think about it, because they should always save something, even if it's $10 a month. Now someone's going, wow, what, $120 for the year? It gets you in the habit of saving, because when you start making more money and you save better, it'll be $50 a month, then $100 a month, then $1,000, whatever the case may be. I'm not ashamed to say that I've been doing budgets since I was 20 years old, and it really helps me. Now, what I do is I rob Peter to pay Paul. When I go, hey, I got enough money in this thing, I'm going to go and go see another concert or whatever the case may be. But you know the parameters you're in, and so forth, and it really does help. Do you budget at all, Erin?
I do. I'm very grateful for my mom. She sat us down at the kitchen table when I was maybe 7, 8 years old, and I take with the practices that she drew it in columns of here's what you budget, here's tithing, here's your fun activities, and I've just been practicing that my whole life now. So
yeah, it's a great skill for that. Do you have kids, Doug?
I do.
How good are they with budgeting?
They're actually very good.
Okay, they're good because
by force or happenstance.
I was going to say you're not leaving the house till I see your P&L. Dad, I'm only 6. Okay, right, exactly. Not going to do that. Talk about this. You and I have chatted about this before, and I think everyone sort of cringes. I mean, we've had 9 Fed rates increase over the last
about right. Mm-hmm.
And obviously, they're trying to curtail inflation. I'm sure there's both sides of the story. I don't understand any of this. That some people say that are pretty critical of our Fed chairman for doing it, and some are saying he's doing the right course. What do you think, just as a whole?
As a whole, I think it was critical for the Fed to take action to control inflation.
Right.
Because all of us suffer from inflation.
That's right.
None of us like to pay 10% more or 30% more for eggs and, 10% more for fruits or, 10% more, whatever it is.
For gas or whatever, right.
And that, it makes it much harder to do what we're talking about from a budgeting perspective and uplifting financial wellness if you're consistently having to pay 10% more year over year. So the Fed needed to take action to bring those inflation rates down. And in this kind of environment, the only tool or the best tool they have is by raising interest rates, because we are, for good or for bad, to some extent, a credit-sensitive economy. Which means that if credit rates increase or credit tightens, meaning it's harder to get credit, that tends to slow down our economy more rapidly than other tools that could be used to do that. So the Fed has felt like in order to calm and ease inflation that's impacting all of us, they needed to be pretty aggressive about rate tightening. I don't think anyone really or too much of anyone really debated the fact that the Fed needed to tighten.
Right.
I think the real debate now is how much more do they need to do that? Have they done enough, and should they pause and maybe even start reducing rates, or should they continue increasing rates? And that's a really good question. I think the Fed has also done, and I don't think they did this on purpose, but if you look at past tightening cycles, the Fed has raised rates to the extent that they broke something.
Right.
And I don't think they broke the whole banking sector, but they broke a certain number of banks, which tends to create ripples throughout the rest of the sector. And so in doing so, what happens often in those cases is that the banks and credit unions themselves will take that lesson and tighten credit themselves.
Right. That's right.
So not only is the Fed moving rates up to discourage borrowing, but they're also acting intentionally or unintentionally on the banking and credit union sector, which provides the credit to individuals and businesses and causing them to pull money back to some extent. So the combination of those two should result in a slower economy and lowering rates of inflation.
Right. We'll see what happens.
We'll see what happens.
I had, just to show how good this guy is, Aaron, Doug, it seems like you and I have been talking about this for a long time. And Doug really called it because I asked him, I want to say it was December of 21. I could be wrong on that, but that comes to my mind. And we were talking about what is inflation going to look like in 22, and now here we are in 23. I could be off on some of my dates, but you had said, and rightfully so, if we go to a recession, and that's an if, it'll be a mild one. And pretty much everyone has said that. I imagine you still hold to that, correct?
Yeah, I think the odds overall of a recession happening are higher now.
Yeah.
Based on what's happened over the last 3 months,
Sure.
particularly over the last month.
Sure.
I still think it's going to be a relatively mild recession.
Right.
And the primary reason I would say it's still going to be a relatively mild recession is even when the Fed is talking about, slowing down the economy and causing more people to lose jobs, what they're talking about is an unemployment rate of around 4.5% or 5%. That's a lot more than it is now. It's, we're at about 3.5% now. So that means, unfortunately, more people are going to lose jobs. But if you look at that and compare it to previous recessions, oftentimes you see unemployment rates of 7, 8, 10, 12%.
That's right.
So you look at 4.5% versus 7, 8, 10, or 12%. That's millions of people who still have jobs. And if millions of people still have jobs, they're going to be able to contribute to the economy and continue to add positive momentum for the economy. So that's why, I still think the recession is not going to be a deep one, not anything like we managed through in 2008, 2009.
Let's hope not. Yeah.
But I also would say no one can really predict. We've all learned, particularly over the last 3 years, things happen, and my crystal ball is not necessarily all that firm and solid in comparison to anyone else's. So.
No, but we really appreciate you coming on, and I know you're a frequent guest on the Spotlight Show, and we're going to sit there and ask our friends at Mission Fed to be able to have you come back on, at least during some of these tumultuous times. And I think you certainly calm our Spotlight in the community listeners down, which I really appreciate, with really good practical advice and with your expertise on it. I think it's good to hear from people who are leveled and aren't screaming from the mountaintops and making everybody crazy in that aspect of it. So Doug, as always, it's good seeing you. Thank you so much for your just unbelievable, great feedback when it comes to what's going on in this country. Aaron, do you have any more questions for him?
Thank you so much for the advice. It's always nice to get financial literacy growing in that area. So thank you.
Absolutely. Doug, we'll make sure we have you back on sometime down the road, sooner than later.
Sure. Happy to do it.
You bet.
And appreciate the opportunity.
Yeah, it's been an honor to talk to Doug Wright, Chief Financial Officer for Mission Fed Credit Union. I'm Drew Schlosberg, joined by my co-host Aaron Tanner, as you've been listening to another edition of Drew Schlosberg's Spotlight on the Community show on Cloudcast Media, brought to you by Mission Fed Credit Union, doing great things in our community for more than 60 years. We hope you enjoyed the show.
You've been listening to an episode of Drew Schlosberg's Spotlight on the Community show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego community. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
Cloudcast Media.